Hello!
Hi,
Welcome
guys.
to Market Monkeys.
Yeah, right, today I want to talk about, we're diversifying a bit now. We're not in Canada or the US talking about stocks. We're now looking at the United Kingdom. That's where we're both from, obviously. We do buy in Canada and America, obviously in China and places like that. But now we're looking at the UK, which I do buy quite a bit of stock over there, and I have done in the past, obviously. But this one we're talking about today is Lloyds Banking. Right, years ago, 2007, 2008, I started buying this stock. Once again, you obviously know from my previous episodes, I like distressed stocks. Right, I may have mentioned before, this stock was 43% picked up by the United Kingdom government, because this company had its tentacles in so many pies, it was like in the fabric of every corner of society. You know, your car loans, your mortgages, your debit cards, your credit cards, just everything, right? But this is a company that started, one of its companies that it owns, and it does own a lot, which I'm going to go into in a moment, right? One of the companies it owns is the Bank of Scotland, not the Royal Bank of Scotland, but the Bank of Scotland, which started in 1695, right? 322 years ago. Okay, still going, but it's under the Lloyds banner. All right, Lloyds itself was started in 1755. I'm reading off the screen, as you can see, just to make sure I get the numbers exact. Okay, so, but they've got lots of, for me, government picks them up at 43% because they can't afford to let them go, right? They've made some mistakes. The crash has happened all across America. We all know this. And then I'm there thinking, this company can't go under, the government won't let it. So why, if the government's going to keep it afloat, I can wait. Dividends, finished. Right, in I go, I start snapping them up, left, right and centre.
What price were you paying when you were buying them?
Started in the 20s.
25.
Yeah, 25, yeah. I think I headed from 50,000 shares at 25. Anyway, I'm way beyond that, obviously. I had bought a reasonable chunk for an individual. That's when I started buying them, because I could see where they have been round about the, I think it's around about the 11 or 12 pound mark, and they've gone down to 25p. I think I started buying them. Right, now there's a problem there, which you start thinking, right, well, they could go down, completely vanish. I understand that, but the reason I took it into my mind was, number one, I see them in all parts of society. I've seen them all my life, but some of the brands they own, I've seen them all my life as well, but I will go into that in a moment. Right, these companies that they own, like the Halifax Building Society, right, and if you're in the UK, most people have seen that all their lives, right? They are the largest mortgage lender in the United Kingdom, right? And under the Lloyds banner, you've got at least 25% of all mortgages in the United Kingdom done through this company in one form or another. Right, MBNA, they've just taken those over for a massive, they've just bought them out massively, just recently. Right, but put that towards all their other credit card holdings, they own now 26%. So go in with the 25% of mortgages they own in the United Kingdom, so that's 1 in every 4. Now you've got just over a quarter, you've got 26% of the United Kingdom credit card system. Right, on top of that you own Lloyds Bank itself, right?
It's global as well, right?
Yeah, but you know what, it's majorly in the United Kingdom.
Major, okay.
It is majored. They have got operations in Europe, but this is a company, let me just tell you exactly what they've, you know, they're on their knees at the moment, but their valuation is still 47.88 billion pounds, not dollars, pounds. This is a company that's still on its knees, recovering. The 43% has been paid back to the United Kingdom government, so they don't own that anymore. That's gone, right? This is what I'm seeing the positive. I knew it would go back that way. It just took years, right? And I'm willing to wait because I knew that dividends would be reinstated. Don't know when. If I had a crystal ball, I could tell you exactly, but I knew it would be reinstated, which they are, right? And I've been patient year after year waiting. But that's what you have to do with a distressed company sometimes, if you believe in it and you believe in the figures and you believe they can come out of it. So that's what I did. I waited, right? So that, like I said, the dividends have been reinstated. They're not at their peaks yet, but they will. They're heading up like that. You know, the last dividend went from 0.85 of a penny to 1 penny, which is an 18% increase. Just a little nibbling at it like that all the way along. As we go by, it will pick up, right? And I've recommended this stock to a lot of friends of mine in the United Kingdom, and I've got people in Canada that have bought it, because this is a diversification of your portfolio. Because if, say, Canada or America goes tanks or goes into a crash and crisis, whatever people want, this is you've got to have things on other continents that can sustain you, and that's what I think like. And I do move my money around, right? So let me just tell you the companies that they own, because if you're in the United Kingdom or Europe, you'll probably know a lot of these companies, but you don't know they're all owned by one company, which is Lloyds Banking Group. Let me just show you the value of this company. Right, the brands are obviously Lloyds Banking, right? So they've been just Lloyds itself has been going for over 250 years. You know, they've seen loads of crashes. They're still there, right? Oh, and by the way, there's a PPI scandal still going on. They've been the largest loser, and they've been paying money back to the people of the United Kingdom. And at the moment, I think they've spent about 17 billion pounds, right? 30-something billion Canadian. But it's gone back to the people because by order. Because PPI was the PPI scandal, which is a personal protection insurance, and they weren't explained properly, and every bank over there has had to pay it back to the people, right? But that is coming to an end in 2019. When it ends, where do you think that 17 billion's going? That's right, it's going back to the shareholder in one form or another. So it's either going to be share buyback, other company, accumulation of other companies, or you're going to see your stock price grow or your dividends grow. But I presume it'll be all of the above there, right? All right. They also own the Bank of Scotland, right? Going back to that, so they own Lloyds Bank. That's been going for 250, right? The Bank of Scotland has been going for over 320 years, right? That tells you something in itself, right? And that's in Scotland. I believe they've been going 320 years, but I believe they were the first bank to ever issue paper notes. So it shows you how old they are, 1695. Okay, the Halifax Building Society. Now, if you're in Europe, you know who they are. They're just massive. They're in everywhere you look. Right, so that's 3 companies there. Next, Scottish Widows, one of the largest performing pension and for pensions and retirement protection and all that companies in the United Kingdom. Right, MBNA. Right, they're obviously just picked them up, just bought them out, but added to their own. They've been going over 20 years. They were bought from Bank of America, but they now belong to Lloyds, so they just accumulated them. Even in amongst all those PPI payments, they're still buying companies, huge companies. I think they paid about 7 billion for that company, US. Right. They also own Lex Autolease. Right. Lex Autolease, a lot of companies will know that in the United Kingdom. They own at least 25% of your car fleets for companies. Well, look at the population of the UK once again. 25% of all auto leases, 1 in every 4, is done through Lex Autolease. Right. LDC is a private equity company, and there's another one just next to it. It's called AMC. Right. They were started in 1928 when there was a crisis in the farming, and they've been doing loans to them ever since. Right. Another one called Birmingham Midshires. That's another mortgage company. They got lots of advisors, and once again, that's just another building society, but nowhere near as large as the Halifax. Halifax dwarfs everybody, right, in the United Kingdom. Colleys, Colleys, is a surveying and valuation experts, right? They're all over the country, and they're obviously surveying and valuation experts. When you've got some with the amount of properties that are going up in the United Kingdom, you need these people, and if you can either have them private or you can own the companies that own them, and Colleys is one of the biggest. So that's the amount of companies they own. Now, for me, I'm buying big on that because I see an end, which did come to fruition, of the 43% of government ownership. It's now fully 100% private. I really like the CEO, Antonio Horta Osorio. He's done miraculous things for this company. They brought him in from Santander when he took over the Alliance and Leicester in the United Kingdom, which was a fantastic move for him. But he couldn't go any further. Then Lloyds poached him, and he's turned this company around. He's all about fintech, financial technology going forward. So I've got a really good feeling about this, about the dividends increasing. And look at my age. I want those dividends to increase, which they are, right? And I'm making good money out of this stock. And it's there for you too. This is a personal recommendation because I'm heavily into it, as you can. I mean, I was buying 50,000 years ago, you know, of shares, 50,000 shares at least. And I've got way more than that now as an individual. So this is a big one for me. It's a cornerstone. Even though they've still got issues ahead of them, I like the issues because I know there's a timeline on the issues. The PPI scandal is the big one because that's running to billions and billions of pounds. And once it's over, the line gets drawn.
There's a limit on it now, right?
That's right. And all the money, it goes back into pure profit. Even though they're making money and giving inflated dividends now, they're still paying billions in fines. It's coming to an end. Within the next year or two, then my dividends are going to go like that, and hopefully so will some of yours. Profit's going to increase.
Share price is going to increase.
Share price is going to increase, and do you know what? We're all happy. And you wake up each day. But listen, if there's anything here that would help you, and I hope you buy this stock because I've bought it. I sincerely believe in this stock. If there's anything that has helped you in this episode, please subscribe. We appreciate you.
Would you say you like that company then?
Just a little.
Yeah, just so I could tell. There we go.
There you go. Well, I mean, that's how I get with distressed companies. That just like them, I like them, and I have to go with it. And if I feel the financials are there, and I feel if I look into myself and say this company can run, and look where it's, once again, look where it's been. I know it's not the future for where it's going, but if you look where it's been, and one company
not
320
necessarily,
years,
not necessarily.
200.
When you say that, not necessarily on the price of the stock, but
No.
You're looking more at where it's been, where its assets are. It hasn't lost any asset.
Right, and that's
So
what I'm
it's able
explaining
to-
is the assets, right?
That's what I'm saying. The assets are still there. It's not. You
They're
haven't
in
lost the
place,
assets.
right? Do you know what? We're agreeing on things, but it seems like we're arguing.
No.
You know, it is what it
Sometimes
is, right?
there's disagreements, but I'm agreeing with you on this one for
Because
sure.
you can see they own it, you know, nearly everything they own, the companies they own, they're 25% of United Kingdom's use. And, you know, we're not, at this moment in time, we're not getting rid of cars. We need leasing and we need car loans. You know, we
Well,
need
if it's not
mortgages.
cars, you'd be leasing something else.
That's right. I don't care what it is. It's bank money.
Someone's gonna
Once
mortgage
again, it's
something.
all leading back to the banks. And once again, some of the biggest shareholders of this company, by the way, is Vanguard and BlackRock.
The biggest ones out there.
Yeah, that's right. But in,
So about Taylor Wimpey, we're talking about that?
well, we're not doing that right now, just
Oh, we'll talk
because
about that.
that'll be the next episode.
Okay.